Hi, everybody. Welcome to our Saturday weekend market update. So the S&P is now down 17.4% from its February high and heading towards a bear market, which is a 20% or more decline from an all-time high. Um, I want to share with you some stats here because I think it's important that you appreciate this, particularly those of you that are investors, which most of you are. The index itself peaked on the 19th of February, um, but the average stock amongst the 3,000 stocks listed on US markets actually peaked in October last year. And the medium performance of all 3,000 stocks across the board now shows that they're down 38%. So we are effectively in a bear market already, although technically speaking, the S&P 500 is only down 17.4%. So, this is the opportunity that we've been waiting for. I said 5 months ago that I thought the S&P was a very strong probability of declining by 10% or more in 2025. Obviously, with the aggressive nature of the Trump administration and what they're doing right now, we've seen it decline further than that. We're down 17.4%. I said recently that I thought the S&P could decline even further. What do I think today as we sit here today? Well, if the Trump tariff taxes, and that's what they are, they're taxes on the US economy, US consumer, I should say, if they stay in place, I think the S&P will decline by 30% or more. The new Trump tariff taxes is the biggest hit to the US consumer with respect to an increase in taxes since the 1960s. And that's what it is. I mean, the American consumer is going to pay these increasing tariffs. It's a tax on the consumer. And Trump is causing complete confusion across the board for investors. You've got his trade advisor, Navarro, saying that the tariffs are going to raise 600 to 700 billion and it's going to help with the deficit and etc. And then you've got Trump saying he might back off on the tariffs and all the tariffs could come off if countries play ball and they bring a, what did he call it? Phenomenal deal to the table. So some of his advisors are saying this is going to help balance the budget, but yet the president is saying, I'll take the tariffs off if countries reduce or eliminate their tariffs. So there's going to be no benefit to the US economy if that's the case, if he takes the tariffs off. So, the left hand doesn't know what the right hand is doing. And, going into January this year, people say to me, Andrew, you weren't critical of the Biden-Harris administration. Yes, I was. Joe Biden was a complete loon. He was a nutter. Dementia, Alzheimer's, it was coming on. The amount of money that the Biden administration tipped into the US economy was absolutely ridiculous, completely nonsensical, didn't need it. But that's what he campaigned on, didn't he, back in 2020? And that's the reason why Americans voted for him. And he kept the foot on the gas, $4 trillion. But the bottom line is the US going into January this year, under either administration, had growing economy, full employment, inflation declining, and interest rates were going to go down. The US Fed was going to drop interest rates in 2025. So there was absolutely zero need for the aggressive Trump tariff taxes that are now in place. And, this is supposed to be the most pro-business administration ever. And that's what the market got excited about in November. But He's just basically pulled the rug out underneath businesses and consumers. You know, he's completely confused everyone. Unless, of course, you believe in his ideology and his madness. You know, in saying all of that, investors do tend to think the worst of times will never get any better. And they often think that, you know, the bottom line is things are never as bad as what they seem, and they're never as good as what they seem. And things will get better. We will get through this. And those of us that are investing, we will make a lot of money over the next 3 to 5 years because these lower prices that we're seeing are to our advantage as investors. And I will be buying more shares on Monday. I'm going to be outlining specifically the details of that in Monday's daily report. And if prices go lower, I will continue to buy more shares. This is another 2022 moment where we saw the S&P down a little more than 20%, the NASDAQ down more than 30%. We made a truckload of money in 2023 and 2024, and we'll do that again over the coming years ahead. But the unfortunate thing is we didn't need to see this volatility. And you know, the US has gone from 75 years, essentially after the end of the Second World War, to supporting globalization, embracing it, encouraging US companies to do business abroad, build manufacturing facilities abroad, bring those cheap goods into the United States to help Americans buy things at lower prices. And they're now gone to a new president who wants to flick the switch to protectionism. I mean, it's just fanciful to think that all of this manufacturing that is in Asia and around the world is now going to come back to the United States. You know, the S&P 500 has delivered a 10% return every year on average for the last 100 years. And that has happened with a price to earnings ratio of about 16. Now, right now, we have a price to earnings ratio of about 19 to 20. So what that means is with a PE ratio of 19 to 20, then the S&P is likely going to deliver maybe 1 to 5, 6% per year. So this is one of the reasons why I say things need to correct further. And this is the reason why people like Monish Paprai is coming out and saying, hey, unless we see valuations overall decline further, we're not going to see the S&P deliver much more than 0 to 5% in the next 10 years. What you need to be really careful of right now, guys, is listening to Johnny come lately, Donald Trump supporters, and analysts, accountants, economists that are feeding you crap and rubbish about when the right time is to invest and how to do it. What you need to do is be surrounding yourself with people that actually have genuine experience in this industry for over 25 years and who do actually invest their own money and a significant amount of it in this financial market, and not be caught up with the far left or far right views that unfortunately the average American is getting caught up in. You know, at the end of the day, we will get through this. As I said, we will get to the other side. We'll make a lot of money as we go along, but it's really going to matter the price you pay, and the quality of the company that you buy is really going to be significantly important, because in the earnings season that we've got starting on Monday, which will go for about 8 weeks, the companies that will release their Q1 profits, the first 3 months of the year, they are generally expected to provide forward guidance. Most of them won't. They just won't provide that forward guidance, because how can they? So the market will get very concerned about that they're not providing forward guidance. And, you know, the reason why they're not going to provide the forward guidance, and I'll give you an example of this, is the calculation of the tariffs that Trump rolled out onto the Rose Garden lawn at the White House the other day. The way that I've now watched and read and seen a number of people have calculated the way that he's actually worked out these tariffs is that he's taken the trade surplus of these countries, divided it by the country's exports, and then divided that by two. And that's how they come up with the tariff numbers. Now, we were led and we were told by the administration that if a country had 10% tariff, we would apply 10% tariff. Now, Japan has an average tariff of 2%, and they were slapped with a tariff of 24%. Vietnam has an average tariff of 5%, and they were slapped with a 90% tariff. So the tariffs cannot be justified. And this is the reason why CEOs and CFOs are not going to provide forward guidance, because, this is not about trade policy. This is about Trump being a bully and just trying to get countries and industries to pledge loyalty to him. This is what dictators do. This is why he likes Putin. And you can be assured that Trump will claim victory shortly. He will go on television and say, the president, prime minister of this country, that country, Vietnam, called me and they've agreed to lower their tariff to zero. And he'll claim victory. But he won't tell you the truth. And everything Trump is doing right now is weakening the USA and strengthening China and bringing other countries closer together. And the American empire that has reigned supreme since 1945, the end of the Second World War, that started to crack a few years ago, is now going to start to crack even further. 70% of the US economy is the consumer. And that consumer right now is going to see their buying power decline, and they're going to reduce their spending, and the US is going to have a deep recession if the tariffs are not lifted. Now, Trump loves to talk about the President McKinley tariffs of the late 1800s. In fact, that president brought in tariffs in the 1890s. But what Trump doesn't talk about is the Smoot-Hawley tariffs of the 1930s. And the reason why he doesn't talk about those ones is because they were a total disaster. But he likes to talk about the McKinley tariffs. But what he doesn't mention is that the McKinley tariffs that were brought in 1890, for the next decade or more, the United States spent 1/3 roughly of that period of time in recession. President McKinley was ousted as president in 1834. And the next administration, just like what happened when Hoover got the ass after he agreed to the heavy tariffs in the 1930s, got the ass as well. And in both occasions, the tariffs were rescinded and taken off because they were a complete disaster. Total disaster. So here's the good news. Here's the silver lining. The tariffs are not going to be permanent. They're going to be taken off, whether it's 2 years, 3 years, 12 months, whatever, they're going to be taken off. And manufacturing is not going to come back to the United States. CEOs know that Trump is not going to be there in 3.5 years from now. He's going to lose the midterm elections the way things are going right now. And a CEO is not thinking about the next 2 to 3 years. A CEO is thinking about the next 5, 10, 20 years. So they're going to sit back and they're going to wait out this period that we're in right now. And they're going to wait until the tariffs are taken back off and they're going to get on with business. And here's something else, by the way, that nobody's talking about. Trump's certainly not talking about it. And that is the debt ceiling that the US will hit at the end of May. The US will run out of money again at the end of May, and they will need to raise that debt ceiling. So there is a chance, with everything that is going on right now, the rating agencies, Standard & Poor's, Moody's, etc., there is a chance the US will have its debt rating downgraded, its credit rating downgraded again. Now, the rating agencies are seeing everything that's going on right now and the fiscal situation, the disastrous fiscal situation the US is in, massively worsen in recent years, and a potential downgrading from the AA plus that it is right now would be another hit to the US economy to push it further into recession, and certainly would push the stock market lower. So the US used to have a AAA credit rating, but that's not going to happen again anytime soon. And what I'm saying to you is what will happen at some point in the next, I believe, in the next 5 to 7 years, is the US is stepping closer and closer and closer to having a Greece moment that happened to Greece in essentially 2012, around that era. The US, if that was to occur, would cause another global financial crisis. And that is a genuine possibility in the next 5 to 7 years. So in the last 24 hours, China retaliated 34% on US imports. Europe is yet to announce what they will do. And the US is simply going to weaken further and further in coming weeks and months. Most Americans, very sadly, can't see this. A lot of them can't see it because they're just blindfolded, unfortunately, and they're watching media outlets and they're following people in the United States that just feed them bullshit. And it's really sad. You know, if the tariffs stay on, the US will have a deep recession. And right now, where we are with the tariffs right now, I think if they don't come off quickly, I think that we're about halfway done with the correction in the stock market. I think we're down we're down 17%. Let's call that 15%. I think we've got another 15% to go. Trump has completely underestimated the impact of what he's done, and his ego is so big that he's never going to admit that he's wrong. He's going to somehow trying to come out and claim victory out of this. But the good news, guys, is that we will get through it. We will continue to invest. Great quality companies that we own today and will own more shares of in the days, weeks, and months ahead will thrive in time. And those of you that are sitting around and watching this video right now and wondering, well, gee, is this a good time to invest and get my knowledge to where it is? You are not going to see, I'm telling you now, you are not going to see these sorts of moments happen very often in your lifetime. They're likely going to happen about once every 10 years. And everybody wants to invest when times are good, when prices are going up. That is not how to move your needle financially. That's not how to grow serious wealth. The way to grow serious wealth is to get invested, stay invested, and keep investing. But when there's blood on the streets, when you have significant events like we have right now, when this is an own goal, this is a self-inflicted own goal that we've not seen before in my lifetime. And we are being presented on a silver platter right now, incredible global growth businesses that are going to be worth meaningfully a lot more money in 3, 5, and 10 years from now that we can buy in 2025. And if you sit on the sidelines and you think to yourself, I'll wait till things get better before I start to invest, forget it. It'll be too late. You've got to get invested, but you've got to understand what's going on and be able to have a balanced view and be able to sift through all the bullshit that so many people try and swing your way. I mean, people that I know, people that I associate with, the fanciful things that they're saying right now about why Trump is doing what he's doing, I mean, this is just a very immature, uneducated approach to what is going on. You have to be logical, remain unemotional, but you have to be willing to step up and put your knackers on the line, as I do with my clients every month, and buy through the good times and buy through the bad times and buy aggressively when there's blood on the streets like there is now. Have a great weekend. Those of you who are my clients, on Monday in the daily report, you'll get an update of exactly what I'm buying, and I will put all the information on the app for you as well. Have a great weekend. I hope your footy team wins.